Okay, this is a chart I've drawn for you guys this afternoon. Now, this chart is not deadly accurate, but it's reasonably accurate because I drawed it myself, and what it shows is it shows the core inflation. And now, why this chart is so important is because this is one of the two indicators that the Fed, actually, there's three that they use when they say they're data dependent. One is the core inflation. They use this inflation rate chart, and they also use what's called the Phillips curve. And they also use the employment as the charts that they use. Now, if you look at the bottom of this chart that I drew, it starts in 2003, and it goes all the way out to 2017. That's where I ended the chart. So it's quite a long chart. And now, one of the things I want you to note about this is how the core inflation, now this red line, you see the red line up here? That's the 2%. That's the Fed's target rate of inflation. That's the rate that they shoot for in order to raise interest rates. Now, you can see that we were over that line consistently back before the 2008 crisis. But now if you look in 2008 there, you see what happened? Right there in 2008, the bottom fell out of the core inflation rate, and it went all the way down, and it bottomed in around 2009 after the financial crisis of 2008. Why I want to show you that is that orange line falling off of a cliff right there in 2008, the orange line going down, that's the financial crisis of 2008. That crisis had a tremendously profound effect on the inflation rate. It dropped the inflation rate. Now, that's the effect you have when you have what I call a deflationary spike event. If that line had went much lower, then 1% interest, see, it bottomed out at just about a 1/2 of 1%, or even lower of core inflation. If that went too much lower, honest to Pete, it would have started a chain of events where the system would have actually melted down. So they had to bring it up, and that's what they did. They started to inflate the system again. And so you can see that they bounced it up through different levels of quantitative easing. And by the year 2012, they had succeeded in getting it back up above the 2% line, but only for a very, very short period of time in 2012 that it actually come up above that 2% line. Now what's been happening is, since they started tightening, and since they've been tightening, what you see is they're starting to actually lose control over it again. And if you notice, in 2017, she's starting to drop again. She's starting to drop like a stone. But they haven't stopped tightening. They're still tightening. And what's the effect of this going to be ultimately? Ultimately, this thing is going to do another 2008. And it's going to do it very soon unless they change direction. Unless the Fed actually changes their course. If they keep on this course, they're going to bring another recession. We're headed, and actually what it really is a depression. They're underestimating it when they say recession. They're going to induce a depression, or what they're going to call a recession. So they're going to call it a recession. They're going to induce a recession. And then what they're going to have to do is they're going to have to try to turn this ship around, and they're going to do the exact same thing they did back in 2000 after the 2008 crisis. They're going to bring in, except this time it's going to be bigger. It's going to be bigger, it's going to be bolder, it's going to be better than it ever was before. And what's going to happen this time is the dollar has been being eroded over the years. And the dollar just ain't going to take it. Another episode of this. This is going to absolutely destroy confidence in the dollar anymore. And we're already seeing the effect. When you watch Bitcoin go into the moon and watch these cryptocurrencies go into the moon, This is the effect of loss of confidence of the dollar already within a certain community. Well, two, it is a certain degree. It's also speculation tied in with that. But the thing is this whole thing is going to melt down. And I believe that they cannot get through another interest rate hike. To be quite honest with you, I don't think that they can do another one. And they're planning another one in September. When they bring this next interest rate hike in September of 25 more basis points, I think it's going to be the straw that broke the camel's back. It's going to be the one little extra weight that it's almost like a guy is a weightlifter and he's lifting barbells, you know, and he lifts these barbells over his head and he's like lifting 400 kilograms or whatever, and his legs are just shaking and his face is all red, and he's got them over his head and his arms are trembling, and he lets them go and the thing comes down with a clang on the ground. And then these little guys come up and they take off and they put on 2 more weights on it, another 5 kgs more on either side. You know? This is what they're going to do in September. They're going to add that little bit of extra weight. Normally, it wouldn't be a big deal. It's only 25 basis points. But they're adding it on top of just barely got through this one. We barely got through this one. And they're going to slam another one in September. This is going to be the one that breaks the system. And it's too late. Once they break the system, once they put this next interest rate hike in and the stock market collapses and falls, say it falls 2,000 points, it's too late then. Then they got to back off. And they know they'll have to back off. But it's too late to back off. Because when they back off, everybody's going to lose confidence. This whole system is only being held together right now with confidence. That's all that's holding it together at this point. And when confidence is lost, this crisis is going to come in so fast when confidence is lost. And so, look, you need to start preparing for it. Honestly, everybody out there needs to start hedging against the dollar. Because when this thing comes down, it's going to come down so fast. And if you haven't prepared, if you haven't hedged against the dollar, if you're all in dollars, well, when this thing comes down, she's going to catch you unawares, and you're going to be just like those people in Pompeii who didn't believe that the volcano would ever hurt them. They found them all melted into the rock. That's where they found the residents of Pompeii. They found them melted in lava because they didn't believe. This thing's coming. It's coming soon. I think September is the time when they next raise interest rates. They're going to induce it, and they're going to trigger it, just like triggering an avalanche. So listen, thank you for listening, and like and subscribe, and we'll see you in the next article. Bye, guys.